guys, it has been a while since my last video, so I think you guys are due for one. I want to say it's been almost 4 weeks now, so I apologize for falling off the face of the earth. Just got a little busy, a little unmotivated. Things happen. But I'm back, and I think it's time for a portfolio update. For those that don't know, I update my investing portfolios on here for you guys to see. I have a few different platforms I use. Acorns, M1 Finance, and Worthy, as well as Bumped on the side. So I go over all those in these different videos. If that's something you like, go ahead and stick around, subscribe, and you'll see more of those videos. So today I'm going to update my M1 Finance portfolio and show you what's been going on, because I believe the last time we updated that was like at the beginning of June, and it is now August, and we are actually getting close to having the M1 Finance portfolio for a full year. So what better time than to kind of update you guys and see where we're at as far as performance goes. So let's go ahead and load this. So my Dividend Digest portfolio. So I think the last time we did the video, we just broke 12.5. So now we're almost to 12.9 thousand, which is great, especially considering I have actually stopped funding this as heavily. So right now I'm actually just relying on the dividends to come into this portfolio and referrals to reinvest into these holdings. So I'm not actually putting in $25 each Monday like I had been. So there's a few different reasons why I stopped doing that. I want to have a little bit more cash on hand in my savings account, just for peace of mind. Some expenses are coming up that I can see that I'm going to need some extra cash. So having it tied up in an investment that I would then have to sell off, then wait a few days for it to be cash, and then it's just a headache. So just for my own peace of mind, I'm going to keep it as cash for now. That doesn't mean I won't save up a large sum of cash and then dump it into one of these portfolios. So don't think I'm like strapped for money and now I'm like not able to produce good, interesting content anymore. But let's go ahead and break this down so you can see performing since August 23rd, 2018. So we are getting close to that 1 year mark. So for 1 year, the net cash flow, I have put in $11,662.60. And the market gain itself is $1,228.23. And then you can see earned dividends were close to $380 there in the course of a year. So, the portfolio didn't start out that big, so dividends were really slow at the beginning. But then when we started getting some size to the portfolio, you can see that they really started to make a difference. So hopefully this next coming year is going to be even greater. This money weighted return says 24.26% return. That's not accurate, and we'll go into the holdings and see an accurate representation of what the earnings look like. But let's take a look at what my current holdings are, because I believe the last time we did the video, it was quite different. I actually just rewatched my previous M1 Finance update video, and I saw some stuff in there that isn't really current with what I have. So you'll see gain, the traditional Gladstone, tried and true. It's probably always going to be in my portfolio. My wild card, the Capital Southwest, which, some people think, that yield is too high, not sustainable, but I'm still holding on to it. We have the monthly dividend paying company, the Realty Income Corp. So you can see how these have all been performing. I believe this is a new one, this utility ETF. So UTG, Reeves Utility Income, let me see the actual name of it. Fund of Beneficial Interest. So this basically got me diversified into the utility sector of the market, because I really didn't have many utilities. Plus, it is a monthly paying ETF fund. The expense ratio is kind of high, but that's sometimes a price you have to pay when you want exposure and want these funds managed by someone. So, the expense ratio and the dividend yield, when you break it all down, it's still pretty generous, close to 4% yield on that. So how do I go back to my pie? Here we go. So that's the new one. You can see how much it makes up of my account there. Let me go ahead and shrink my head a little bit so you can see better some of these gains, targets, and whatnot. Plus, I don't think you want to see my big head for the rest of the video. Aqua Hospitality REIT, again, a consistent monthly payer, 10 cents per share. Coca-Cola and Pepsi, of course, controversial. I own 2 beverage companies. Why do I do that? Don't know. It's just kind of how I'm feeling. I have no real rhyme or reason. They both are dividend players. I like both companies, so might as well own them both. Now, my strongest growth stock, so to speak, is Procter Gamble. So it does pay generous dividends. It's part of the consumer sector. All these different products they make, detergents, stuff like that. I'm just most familiar with detergents because I used to work in a warehouse where we stored the Tide detergent and whatnot. But you can see I've almost had a 32.5% return with them, and that's not including dividends. So they're definitely my number one player right now. AT&T, everyone says that telecommunications, they're going to do something wonky when 5G comes out. They don't know who's going to keep up. I chose AT&T. They have a really generous yield, so I'm going to hold on to them. We'll see how they perform. Again, here's Pepsi. A fun little play there. I like what they're doing, so I'm going to stick with them. Hopefully they get into the cannabis beverage industry. That'd be really interesting, and we'll see how that goes. Then, a stock that I added really recently, almost 2 weeks ago, we have Iron Mountain. So if you don't know what Iron Mountain is, they sort of handle like data and documents for large companies. The company I work for actually uses Iron Mountain, and basically like you're kind of signed into a big contract when you use Iron Mountain to handle your stuff. Large companies like what I work for, you have to keep these private documents for up to like 7 to 10 years at a time. And after that, then you have to dispose of them in certain ways. And that's kind of what, to my extent, what we've used Iron Mountain for. But I know they have a bunch of cloud services, data services like that. So, when I just think about their business model, like you're kind of locked into business with them for years at a time. So, that seems like a pretty strong business model. And really, that's all the farther I need to dig into it. They're a big, strong dividend player. I want to say it's close to like 8% yield. 7.92. So yeah, generous there. It is a quarterly payer though. So just keep that in mind. You're not going to get that spread out each month. It's not a very big holding yet, barely to $90 in it, but all this, that $90 is just from dividends and referrals from the M1 Finance platform. So I haven't actually pumped any of my own money into it. It is all strictly from the income or the dividends from these other holdings, as well as getting people to use my referral link. So it's pretty nice that I get some stock in that without having to do much beyond hold these companies like I already have been. So if we take a look at holdings, so let's actually look. I'm trying to think how I want to organize this. Oh well, let's just look at some of the actual return on this portfolio. So the weighted average, it said it was like 24.26%. If we look down here, it's actually like 7.79%. So that's still pretty good return. Does that beat the market, the average of the S&P 500? No, but basically I built this portfolio myself, and is it darn close? And does it meet my investing goals and strategy with dividends? Yeah, so I can't really complain about that. If we want to see who has the most shares, honestly, I think it goes, yeah. So Gain, you can see most shares in there. That does hold the most value. Capital Southwest, Apple, UTG, that fund, that utility fund, AT&T, Coca-Cola, Realty Income Corp, B&G, Pepsi, and then Iron Mountain. Iron Mountain, by next week, I want to say more dividends will fall in and buy more shares. So I'll be up to maybe 3.5 shares next week. I mean, I'm getting really antsy not funding the portfolio each week like I had been. It's kind of eating at me that this isn't growing. But I mean, at the same time, the peace of mind having more cash on hand, it's a constant struggle. If I get really upset and I want to put more money into this, I will. I'll probably set aside a lump sum and just dump it in here. But for now, I just have to watch this grow slowly and slowly. So, back to the portfolio. Let's actually look at activities. So if we look at activity, which M1 did update this tab, it looks a lot neater. You can find stuff easier. I want to say I have been buying Iron Mountain since July 25th, maybe? Was that my initial purchase? Or could it have been... No. All right, so since July 25th, $20, that was from a referral. The dividends from Gain and UTG equal $21, so I bought more Iron Mountain with that. AT&T paid out $17.68 on August 1st, so I bought more Iron Mountain with that. And then I want to say this was 2 referrals. One was still in July when they were giving $20 per referral, and then one actually was from August, so it was $10, so I got $30 worth of referral money there, and I bought more Iron Mountain with that. So again, just to reiterate, all of this going into Iron Mountain, basically I didn't have to put any of my own money in. I mean, dividends was my own money at one point, but you know what I mean. As a dividend investor, you guys know what I'm talking about. So yeah, that's the most recent activity. Let's see, if we look at one-day performance, let's just take a look at how we're doing today. Who's rocking it? Oh, of course, P&G, Apple, the REITs are up. Realty's down, so that's not bad. Of course, my strange capital, Southwest. So it's looking to be a decent day, up 72, almost $73 so far today. Let's look at the week. As we all know, Monday was, I guess, a crash, the start of the recession, but within 2 days I recovered from that, so I didn't change any sort of investing strategy. I just sort of moped along and waited for everything to come back. So if you thought that was a crash or a recession, I got some bad news for you. So I'm trying to think if we can get a visualization of when I stopped sort of putting money in weekly. I want to say it was about the end of June, beginning of July. So even then, I've still been getting some good returns, almost more returns than when I was putting in the $25 weekly. So we're doing all right in here. So hopefully, maybe tomorrow I'll have broken 13,000. That'd be pretty cool, but I mean, we're close right now as it is. So that's all I got for you on this M1 Finance portfolio update with my Dividend Digest pie. If you guys have any questions, you want to know the method to my madness as far as what I choose for my holdings, go ahead and comment below. I got kind of a heads up. My methodology is probably nothing too mathematical, statistical, scientifical, anything beyond just gut feeling. So be prepared for that. But like always, guys, I thank you for watching. Sorry it was so long since my last update video. I appreciate you sticking around, if you did stick around. And I will catch you in the next one. Thanks.